Hello, everyone. Welcome to our xerocon App Academy. We're going to give it a few minutes while people come in. So welcome. We're excited to have you here with us today. Now we have Chris from Avalara, who's going to talk about the sales tax side of things. So Chris, you're up.
Yeah, oh, fantastic. Well, that is going to be a tough act to follow, Fahad. That was fantastic. And I appreciate, just all the mentions of Avalara. I know that our teams have worked very hard together over the last year to 18 months to successfully release this partnership, this integration. So very excited to be here. Amy, thank you for letting me join. I know we've worked together in the past, so it's always a pleasure to see you. So we're going to kind of go through a very similar process. We're going to talk a little bit about some of the challenges that where sales tax is. We'll have poll questions, breaking it up for the CPE credit, and then we will have time for questions at the end. So my main purpose here is to take this super boring process of sales tax and not put anyone to sleep at 3:30 on the East Coast. I know this is when the lunch is hitting. We're almost done. We're trying to stay awake. Amy has a great idea. Let's talk about sales tax, right? Okay. So fair enough. We'll go through it. So first thing wanted to talk about is why are we even discussing this, right? And my background was a chemist at a pharmaceutical company. Chemistry degree, was testing drugs for efficacy for one of the largest pharmaceutical companies. And I had a good friend of mine that said, "Hey, you're pretty smart. Why don't you come do this sales tax thing?" And I'm like, "Oh, you know what? I am pretty smart and I can figure out sales tax. It's 7%, and anyone can calculate 7% of a sale." So I get in here. Here I am 10 years later, still learning about sales tax because it is, I hate to bust your bubble, it is not 7% every single place in the country. The US actually has one of the most difficult, crazy tax laws. So we'll kind of dig into some of that today. So first, why is it important? So first piece, it's a huge part of states' revenues. U.S. is kind of unique in the sense that we have allowed our states to create their own tax laws and to generate their own revenue from sales tax. So you'll notice there's over 13,000 different taxing jurisdictions in the U.S. alone. Reason for that, each one of these states, cities, counties, subways, sports stadium, phone booth, everyone that wants to can essentially create their own sales tax jurisdiction and collect money from that. Which is, I'm joking a little bit about the phone booth, but as you dive in and see the different tax jurisdictions, it is kind of wild to see what all constitutes a tax jurisdiction. Another piece is up until about 6 years ago, sales tax was only based on physical presence. And it was based from a Sears and Roebuck catalog. They were selling into states and they were having to travel into states. And so states said, "Hey, you know what? We're going to start charging sales tax when you enter into our state physically." As many of you know, there is this thing called the internet. I'm sure everyone at one point had a CD free from Walmart to sign you up for America Online. Took you about 30 minutes to get on, and you were able to send one email in an hour. But that's where we came from. And now we're selling transactions, millions of transactions in a minute through this internet. So the states saw that. They realized they were missing out on a ton of money. And so about 6 years ago, they adjusted the Nexus laws, or the laws where you need to collect and remit tax, by adding e-commerce. So they were kind enough to install small state thresholds or small seller thresholds, where if you were a small seller, meaning you have less than $100,000 of sales into a state, you don't have to register to collect and remit sales tax in that state. But once you cross that threshold, now you need to start collecting and remitting sales tax on behalf of that state. So that's a big reason why we're talking today. It's just become so much more prevalent in the last few years, that every business that is selling online, every business that's selling across state lines, more or less at least has to look out for this nexus. So kind of cool. Got a quote from a Xero customer. Until now, I haven't taken on goods-based businesses across multiple states because the sales tax is just too hard. This is a story that we hear time and time again. People don't want to sell into new states. They don't want to sell into new countries. They don't want to sell into new jurisdictions because they're worried about the tax laws. That's one of the reasons that Xero and Avalara have teamed up. So now you don't have to worry about that anymore. So what makes sales tax so complex? Well, there's a lot going on. One, you need to know where to collect tax. You have all different tax rules. You have each jurisdiction that's going to have different tax rules and different things they tax and different things that they tax differently. So you have Texas, for example, that taxes software at 80%. You have California that doesn't tax software. Then you have North Carolina who taxes software at 100%. So you just have all these rules across the different state lines and jurisdictions to keep up with. So with that being said, I'm going to come to my first poll question, Amy. So what is your biggest tax compliance challenge? And this is a multiple choice. You can select more than one. We can leave this up for a moment.
Yes.
I'll take a sip of water.
I feel like all of them will probably get checked.
Yeah, that probably would have been all the above option probably would have been good now in hindsight.
So far, number one is Nexus footprint, followed by filing and remitting, but everyone picked everything. So
okay. Well, this will be good. We'll get to kind of review how Xero and Avalara can help with that. Okay. Well, fantastic. So I'm going to come in with another just fun did you know. So at Xerocon, if you came by our booth, we had a sales tax. What was it even called? We had sales tax trivia at our booth. So if you were at our booth, you saw these two questions and you know the answers. But in New York, tacos are tax exempt, but burritos are taxable. Who would have thought? New York has a specific sandwich tax where they have listed out a bunch of different food items that New York classifies as a sandwich. And then I know you guys are holding your breath to figure this out. Is a hot dog a sandwich? Well, according to New York State tax law, a hot dog is a sandwich, and it is specifically stated as such in their tax law. Isn't it crazy what people get paid to come up with? In Indiana, Snickers bar is taxable, while Kit Kat and Twix bars are not taxable. Kit Kat and Twix have flour within the first three ingredients, so they are considered a grocery item as opposed to a candy. So that is why Kit Kat and Twix are tax exempt. Just some fun bar conversation, right, about sales tax. So here are our 5 steps to managing sales tax compliance. First thing you need to do is to understand where you have to collect and remit tax. So this is understanding your nexus. Amy, if I remember correctly, you said this was one of the biggest concerns among this group. Then once you have created that nexus or you've created that connection with the state, it's time to get registered. You can't technically remit tax if you aren't registered because you don't have an avenue to send that tax back. Then the fun piece around calculating the tax, we'll go dive more into that. Xero has done an incredible job with their system. integrating Avalara so it looks and acts just like native functionality, so you no longer have to worry about that tax calculation piece. Then we have to track and manage any tax exempt sales. And then lastly, once all that is complete, we can finally pay the man and get that money back to the states. So I wanted to go through, I don't have a demo per se, but I do have a couple screens that we've pulled from Xero, and it's a very straightforward implementation. First thing you're going to do is you add your registered states. You're going to check the boxes for those states. Then you will map your products and services to Avalara's tax codes. So we have a couple different tax codes that denote different types of services, such as shipping and handling, software, and things of that nature. And then the last piece is just applying that auto tax rate to your invoices. So that sales tax is just going to show up. Fahad did a fantastic job of showing that, just because anytime you should create an invoice inside of Xero, Avalara is going to populate tax on that native tax field. So and I have a couple screenshots of what that reporting looks like inside of Xero. So you're going to add those business locations. Avalara is going to start collecting tax right there. And then we also have sales tax reporting that is going to be available to you. It's native reporting inside of Xero. Here is a screenshot of one of the invoices that was created. And you'll see we have 3 different line items. We have the videography services, editing services, and photography services. As you can see, 2 of these line items are going to be taxable, the digital goods. And then we have photography services, which is a service that is not taxable in Colorado. And you'll see that line item is tax exempt. Then when you go over to the right, you'll see that breakout for the different taxing jurisdictions and how we got to that sales tax rate. And this is all I'm showing you is just a couple of screenshots from Xero directly. So this is Avalara is just populating this data. Xero is making it look wonderful and giving you great reporting to have on your side. So we're going to know our Nexus. I'm going to go through these slides pretty quick. What this is just our economic Nexus thresholds. We do have sales tax risk assessment available to you. If that's something that you're interested in, feel free to ping Amy after this, and we can get you set up with that. But really what these next couple slides are is to show you that each state looks at economic Nexus differently. So you'll see a number of these states, $100,000 or 200 transactions. Quite a few other ones are just 100,000. And then we have some of these states such as New York, California, and Texas, which have larger thresholds of $500,000. We go in, what counts as a sale? And each, funny enough, it depends on what state you're looking at. Is it gross sales through a marketplace? Is it only retail sales? Is it only taxable sales? Each state, fortunately, they've really come together to make this easy. Each state looks at it a little bit differently, and we can certainly send these slides out afterwards as well, if that's of interest. And then lastly, now we're talking about tax exempt sales. Do the exempt sales count? Do they not count? Are they a mixed bag? Just same thing. It depends on what state you're in. So we'll talk a little bit more, and as we move to marketplace facilitators, the reason that it's so important is because a lot of states look at these marketplace sales as Nexus creating activity, even though the marketplaces are collecting and remitting the taxes. So every state that has a sales tax, you'll see Oregon, Montana, there's a couple others there that don't have market-based laws, it's because they don't have sales tax. But every state with sales tax has a marketplace law where the marketplace will actually collect and remit on your behalf. But when you report sales, you still need to report those sales. You just don't pay tax again on them. So here is a list of Nexus creating activity. I'm just going to show this for a moment, and you'll see a lot of these are physical presence, but some of the ones that I think are of particular interest is commission to resellers, so 1099 employees. So maybe they're not a direct employee, but they're a contractor or a reseller. That one is very commonly comes up on a lot of calls. And then also drop shipping. So drop shipments come up in calls quite a bit. We call drop shipping the Bermuda Triangle of sales tax. Very confusing. Happy to chat more about that. That might be its own separate webinar. But with that being said, here we are to poll question number 2. And it is, how many clients do you have with sales tax obligations? And unfortunately, it's not letting me vote.
No, you cannot vote. Presenters can't vote.
Just about every client I have has sales tax obligations. I guess that's why we're talking.
We have some, many, most, as the people are picking from. So
Awesome.
at least there's none. So there you go. I'm sure, I don't know, I'd be very hard for you not to have it with all these laws and such.
Yeah. If someone said none, that's who we would need to talk to. Find out what their secret is.
Yep, but no one did. So there you go. So
Cool.
some, many, most.
Well,
Thank you, everyone.
Thank you. All right. So now you know your Nexus. So what's next? The very next piece is registering to collect and remit sales tax. Very important to register before you start collecting, because if you begin collecting without a way to pay the sales tax, the states typically don't smile upon that. They think that you are doing something you shouldn't be because you don't have a way to pay it, but you're charging it. Just never a good thing. So make sure you get registered, whether you do that yourself, whether you use a company like Avalara can help with that. And then there's also different ways to register depending on how much liability you have accumulated. We have programs such as a voluntary disclosure agreement, which will eliminate any penalties that may be acquired due to non-collection of tax. After you're registered, now it's time to start collecting. This is really fun. This is a fun picture because it's true. We have our friends at 7501 Locust Street who probably get all of the packages from their next door neighbor at 7495 Locust Street, because their tax rate next door is about half. I know that sounds crazy, but it is true. That we see this. We see shopping malls that if you buy from one end of the shopping mall, the tax rate's different than the other end of the shopping mall. We have neighborhoods very similar to this, that the next door neighbor has half the tax rates. I even had a client one time that had a sign on one side of the highway that said, orders please get delivered here. And there's an arrow pointing across the highway, because if they put the address for the left side of the highway, it saved them about 3% of tax than if they put where their facility actually was on the right side of the highway. So crazy things here around all the different sales tax jurisdictions. It's one thing that you have to keep up with all of those. Next, product taxability. So products and services are going to be taxed differently state by state. One of my favorites is donuts in Texas. Everything's bigger, including your waistline in Texas, because if you eat more than 5 donuts, you get them tax-free. So kind of crazy to think there. But we have, over 1,800 different taxability rules throughout the different products and services. So as you can see, very difficult to keep up with without some sort of system in place to keep up with these 12,000 taxing jurisdictions, 1,800 different tax rules, state by state. Xero has done an incredible job implementing Avalara through auto sales tax so that you never have to worry about these things. So next, sales tax exemption certificates. What makes these difficult? And you can read, but the big thing in my mind is just like sales tax Nexus, exemption certificates are going to be very similar, as in each state is going to have a different exempt form. Each state is going to have different rules around when those exemptions expire and what different products and services can be exempt. So just like how each state has different Nexus laws, different taxability laws, they like to stay consistent and have different exemption laws as well. So what does a good process look like for managing sales tax exemption certificates? It's important to think, you want to make sure what you have on file is the most correct and up-to-date form. So first thing you need to do is you need to actually get that form from your client, from who you're selling to. I have a quick story about a company that I was working with that would come see us at trade shows. They say, "Chris, we love Avalara. It's such a great company. We just don't need you guys." I'm like, "Oh, hey, you know what? Fantastic. I'll take it. I love hugs. But why not?" And they're like, "Well, we're 99% tax exempt, so we don't have to worry about sales tax." Okay, great. Next year they come up, "Chris, love Avalara, but we still don't need you guys." So I just take the hug and they walk on. Third year they come up, there's no hug. They said, "Chris, we really need Avalara." And I'm like, "Oh man, what happened?" Come to find out, they had requested certificates from all of their from all of their customers. But instead of validating these certificates, they put them in a filing cabinet. They left them in that filing cabinet. And when they were audited by the state of Washington, they found out that they had collected some exemption certificates. They'd also collected a number of business licenses, some IOUs, and a picture of someone's cat. So unfortunately, cats do not count to tax exempt your products, but they are very cute. So the state gave them a pretty hefty fine. We worked with the state to help them collect all of their missing exemptions, or as many as we could, and get those fines reduced as much as possible. So very important to validate those certificates, managing them, keeping up with them, making sure they're not expired, reaching out to your customers to collect new ones as they do expire, and then just having reporting available so that centralized location so you're able to see what you have on file. Avalara helps to automate all of these processes there. Next piece is, now that you have the money, you've collected the right amount of tax, you need to pay that tax. It's time to pay the piper, pay the tax. Fahad did a great job talking about aggregating data, pulling it from multiple sources. That is one of the more time-consuming things that you have to do. Luckily, Avalara has over 1,400 pre-built integrations into all of your different business systems. So anywhere that you would be invoicing out of, just like Inventory Plus and Xero, the different platforms inside that you can have different integration points. Avalara is going to be populating, we're going to be aggregating all of that data. So think of us as the centralized point of truth for your sales tax. Then you have to file the tax returns. Just like everything else with sales tax, it depends on the state, different forms, different due dates, different filing periods. And then you need to make sure that that is paid on time correctly in the proper format. And then you have to keep record of that in case of an audit. For most states, it's 5 to 7 years. So now we'll go through the 5 steps again. I think we hit on all of these today. So understanding where you have to collect and remit sales tax. And then at the bottom, you'll see a little plug to a service that Avalara offers. So we do have Nexus studies to help sales tax risk assessments. You need to register to collect and remit that sales tax. Very important piece, not to forget there. We have a professional service team that helps calculate that sales tax, keeping up with all those different jurisdictions, keeping up with all those different economic nexus laws. Auto sales tax is going to do all of that for you through inside of Xero. And again, I can't reiterate, fantastic product that Xero's put together. Then we're going to be tracking the exempt sales. And then finally, we get to pay that sales tax. Another just small plug of Avalara. We do more than just US sales and use tax. We have a number of other arms of our company, of our business. I'd say some of the big ones is going to be 1099s and W9s. Also license management. We're starting to see a lot more in the international space with the e-invoicing or the live invoicing and reporting. So these are all different things that Avalara can do. And then now I'm going to go to our last poll question. And after that, we will open it up to Q&A. And I still can't vote, but I do not provide sales tax services.
I don't
It's
either.
way too complicated for me.
Nor do I want to.
Yeah, absolutely. Absolutely.
Well, we have a mixture of yes, no, and no, but we're going to start.
All right. There we go.
So
Yeah, and there's a number of different ways that Avalara can work with you as a advocate of Xero, as a bookkeeper. So we have just a straight referral program where you can send your clients to Avalara, and we'll work with you and your client to evaluate what solutions they need. And then Avalara also offers tools for accountants that if you want to start filing tax returns or you want to automate your return filing process, we can work with you on that as well. So we have a number of different ways that we can work with your teams.
and if you do need CPE, please make sure you say yes to this wonderful poll so we can get that to you. Give us about a day or so to get them processed, and you'll get an email. And if you have any questions for either Chris or Fahad, now's your chance to ask in the chat or the Q&A. So we have some time. Not much time, but we have some time.
Yeah.
And
yeah,
then I just want to do one more question. And again, thank you both for being on our XeroCon App Academy. We certainly appreciate it. In case you didn't know, Insightful Accountant has a new program called Be Insightful, where you can get CPE credits. You can hear from trainers. We get out extensive trainings monthly. It's a membership to get as much content about everything and anything in this space. And we'd love for you to be a part of it. It's a new launch for us, and we have, we're growing our members every day, which is awesome. But if you haven't heard of it or would like to learn more, just take this poll and we'll get that information to you. If you do sign up to become a member, the best perk about it is you'll get entered to win a trip worth $5,000. So we'll be giving away a trip with the cost of $5,000. We'll help you book the trip. We'll help you plan the trip. So if you do become a member before end of October, you'll be entered to win, just as a little perk. So
yeah.
All right.
And then
I'm going to end that.
Question.
Sorry about that. Go.
Yeah. And I apologize. I pronounce your name wrong. But we do have integrations into about 1,400 different business systems. Clover, Shopify, Xero are examples of those. So we are able to integrate into those systems and capture all that sales data so that we can accurately file the sales tax. And then gross sales data yes, we do want to ensure with the client, with our partners, that all of that data is included. So we have extractors for platforms like Amazon, Walmart, Jet, Wix, Facebook, and things like that, to make sure that all of that gross sale data is included, not only for the tax return, but also for tracking economic nexus. So we automate that process as well. So hopefully that helps answer your questions there.
If there are any more questions, feel free to put them in the chat or Q&A. If not, we are at 4 o'clock. So thank you again, both Fahad and Chris, for joining us for xerocon App Academy. Very excited to have you here presenting on these amazing solutions and how you can help make it easier for their clients, which we all want to help.
Yeah, thank you, Amy. The insightful accountant is also very timely. I like it.
Yes. All righty. Well, thank you all. Stay tuned for the recording, your CPE, all that stuff. And thank you so much, Fahad and Chris, for being here today. Appreciate it.
Our pleasure.
Bye,
now.
everyone.